February 14th, 2024. My one thought coming into the day was that we were going to have a more sideways day. The reason being, this is not a good buy bar or not a good buy signal bar here. It is on the moving average and bulls bought the moving average, but I thought in general there were probably going to be sellers somewhere above here. And I still think that's true. We might have to test to this low first to let those traders who bought below this and scaled in lower out at break even. But in general, I do think we're going to get back to this high and we're going to get back to this low. So I was expecting a lot of trading range, or sorry, we're going to get back to this high and this low. So I was expecting a lot of trading range price action today. We did end up getting a measured move up of the wedge. You can see 1, 2, 3. So we essentially had a wedge here, right? And a failed breakout below the wedge on 32, reversal up. So reasonable swing by 32. And we got 3 pushes up, 1, 2, 3. And then we ended up getting a measured move based on the height of that. And that's where this rally went to on 78. Bar 1, it's a bear bar closing kind of near its low. It's a low one short, but if you look at how strong this rally was yesterday, and then a pullback, and then essentially the spike up, which is another rally. If you're selling one, you're betting that the spike up or the gap up was a second leg trap, and it probably wasn't a second leg trap. General, just like how over here, just like how over here, you're expecting a second leg down from the bears. Over here, you should be expecting a second leg up from the bulls. Bear bar on 2. So follow through for the bears, but if you're selling here, you're selling right on yesterday's high, which isn't really all that good. There's probably going to be, some support at yesterday's high since the prior day's high and low are always magnets. So really not a great sell below 2. If you're selling below 2, you're still hoping that it's going to be a big bear trend. But if it's going to be a big bear trend, you're probably going to get a lot more follow through bars. The bears are able to make 5 points, which is good. So good for the bears. They were able to make 5 points, but you're going to get a lot of follow through bars here. Not just 2. You're going to get a big solid close bar 3, 4, 5. This is going to be a big bear trend. And additionally, 1 wasn't really that great of a bar. So while it's technically sell the close on 2, it's probably a bit more of a buy the close bar since, this is probably going to be a trading range open. And in trading range opens, when one side needs 1 more bar to make the market clearly always in that direction, they usually don't get it. So I think bears needed 1 more bar on 3 to make the market clearly always in short. And as a result, they didn't get it, right? There were more buyers below 2 than there were sellers. So, not really that great to sell below 2. And you get a big reversal up on 3. 3, bull bar. If you're buying above 3, you're betting that the bears who sold below 2 are about to give up in a big way. But we already have a pretty climactic spike into yesterday's close and then a gap up. And, does this look like the start of some big bull trend? Probably not. So I don't really think it's all that good to buy above 3. Double top 4. We're in a tight trading range. We have been basically since the open of the day, but at least a 3-bar tight trading range. So if you're selling 4, at least you're selling higher in the tight trading range. But the reality is it's really not all that great. What's probably going to happen is any bear who sold the close of 2, disappointed in 3, is probably going to sell more below 4 and try to get out around break even. And you can see those traders were not able to do that. They got close to getting out around break even, but they were not able to. So they might still be trapped in. And we get a double bottom 5. Now we have a double top 1, 4, and a double bottom 3, 5. So trading range open, tight trading range, not that good. 6 is follow through for the double bottom for the bulls. But is this really, is this great follow through? If you buy above 5, are you thrilled to see 6? Not really. It's just a really small bar. So it's really not what you want. If you wanted a bar that was, probably more like this. If you bought above 5, you wanted a big bull bar like 10, maybe even a little bigger than 10. You wanted a big bull bar breaking out of the 1 high, closing far above the neckline of the double bottom. And you just didn't get that on 6. And so disappointment, you wanted to see a bar like this. So disappointment 6. And as a result, we end up finding sellers above on 7. Additionally, 7 is a failed breakout of the neckline of the double bottom. So 3, 5, neckline 4, failed breakout 7. But probably buyers below 7. This is a reasonably tight channel. And so probably buyers below 7. And disappointing follow through 8, relatively expected. And then an inside bar on 9. And, a couple doji bars, really nothing to do here. This is a tight trading range. And then suddenly bull surprise on 10. Bull surprise on 10, closing above the high of the day. And important magnet, I thought, was this low. Why? Because bulls, it wasn't great to buy below this. It wasn't even good, but it was technically reasonable because that the bulls who bought below here and scale in lower are probably going to make money. And that's why I think that we're getting back to this low. Additionally, we've been on the moving average for so long. We've only had 1 bar below the moving average here. Bulls were probably going to buy the first test of the moving average and get back to that high. So my thought was that this low was going to end up being a magnet. And you can see We got a big bull bar on 10 and follow through on 11. And, that low is really, it's really far away. So it wasn't like it was kind of back of my mind type of magnet. But I thought there was a chance buying above 10 that we could see a pretty good rally today and end up getting back to this low. So take a chance, buy above 10, and you get follow through 11. 11 is subtly disappointing. It's not, okay, disappointing is not the right word, but it's subtle, but 11 is probably not as big as you want it to be. It's kind of, it's better than like 6 after 5, but it's not quite what you want. What you wanted to see, you see how you have this bar and this bar is slightly bigger. You want to see a bar that's the same size or maybe even slightly bigger on 11. You want the bulls to be convinced that we're going to get a big bull trend. So, this bar about 8 points, this bar only about 5.5. So if you get another 8-point bar on 11, bull bar closing near its high, if this bar is just a few points taller, we probably end up going a lot higher. But 11 not quite closing on its high and leaves some concern for traders. Traders are thinking, well, good bar on 11, it's okay to be long for sure. We're always in long, but we probably need one more bar, essentially. So bulls wanted 12 to be a good bull bar closing on its high. You can see we had an open gap with the 1 high, right? So traders who sold above 1 got trapped on 10 and 11, and they want to scale in and get out around break even. And bulls want to prevent that from happening and keep the gap open to keep those traders trapped so that they can get a swing up. And you can see disappointing follow through for the bulls on 12. Relatively expected to get disappointing follow through on 12 after 11. Bulls would have liked to have seen another bull bar, but 12 isn't the end of the world. But the question becomes, are the bulls who bought the close of 11, are they going to be disappointed in 12 and sell out of their longs around break even right here? Or are they going to continue to buy? So if you're a bull, what you wanted to see on 13 was a bull bar closing above the high of 11, and ideally, I guess, above the high of 12, showing that bulls were willing to buy at this price and buy more rather than sell out of their longs and be disappointed thinking it's trading range day. And you can see on 13, when we touched the high of 11 during 13, those traders ended up selling out of their longs, and that's what's causing 13. A lot of bulls, they see 2 bear bars and they just give up. They were hoping, they thought 12 was okay, but they were hoping bulls were going to buy. We were going to get a swing up, and instead we got a second bear bar. And so they just flattened at the market, and that's what causes 14, a good bear bar. More follow through for the bears, 15, a good bear bar. And right at the open of the day, in what's probably a trading range day, I'd imagine we're going to get a second leg up from 9 and 10. 16, a bull bar closing near its high. If you're a bull and if you're a bear and you shorted for any reason, you probably get out above 16. And if you're quick, you can sell again below 16. It's a low 1 short in a reasonably tight bear channel. And 16 might just be trapping bears out before we get a swing down. So you could sell here. You could sell below 17. It is right on the moving average. It's not that great. Bulls want 17 to be a second leg trap, but I still think okay to be short. This is a pretty tight bear channel. More follow through for the bears on 18. We're probably at least going to get to the low of the day. And the 2 close is an area where bears initially sold and got trapped. More follow through for the bears on 19. But my problem with selling 19. So I'm going to talk a little bit about what I did in this area. I don't love everything that I did in here, but I thought it was reasonable what I did. So I did take the sell on 17 and I scalped out with 10 points. So I got out down here, which I felt pretty good about. And then we got a bounce and a low 1 on 21. And the reason why I scalped out with 10 points on 19 was because I thought the bulls who bought below 3 were going to make money. So I thought we were going to bounce back to this low. So while I took the sell here, and this is a tight bear channel, it's pretty parabolic, and we're probably going to get back to the 3 low since this is most likely a trading range day since we have good bull close, couple good bull closes. So it's probably a trading range day, and I thought the bulls who bought below 3 were going to end up making money. And you can see they did on 20. And then we got a low 1 short on 21. And I felt kind of torn about 21 because it's a third push down, 1 pullback, 2 pullback, 3. So it's a third push down, and it's bulls made money, so it's a trading range day. And I was hesitant to sell it. I did end up selling it, and I got stopped out. And I made a little more on my sell here than I lost here, but I didn't think it was a very good trade. I really thought, I think my problem with 21 was my premise that these bulls were going to make money ended up being correct. And then I still took the sell anyways. And it's a low 1 short. And, you could argue that if you're going to sell a low 1, you want to sell it. Well, it's true. If you're going to sell a low 1 or buy a high 1, you want to do it in the spike phase of a trend, right? So low 1s and high 1s are at their best in the spike phase of a trend. And you could argue that 17, 18, 19 is the spike phase of a potential bear trend. But 21, basically a doji bar and probably a trading range. So really not all that great. I was very close to sitting out of it, but I ended up selling it. And I just don't like that I did that. And you can see the Bears, the Bears who are smart had better management than I did. They took the sell below 21. They were disappointed in 22. And so they got out around break even during 23. And that's why we got this big bounce on 23. So it's deceptive. Traders will look at 23 and they'll think, oh, it's a big bull bar. I got to buy. But the reality is that this is just a big bull bar and probably a two-legged correction. And this is just from short covering on 23. So the Bears, they see 21. Maybe they sell, they're disappointed 22, and they're getting out around break even 23. And that's causing the big rally. And that's why you don't get follow through on 24, because the Bears who took the sell for any reason, are the Bears who were getting out and covering, they're all gone. They've already covered. So it's not all that good to buy above 24 or 23. And disappointing follow through on 24, disappointing follow through 25. You sell 25, it's an inside bar. You could argue it's an inside pattern, but it's right on the moving average. Maybe for a swing, but I don't, that's not my kind of trade. 26, probably the second leg up from, this move here. And then big outside down 27, closing near its low. We're at the bottom of a trading range, so really not all that great to be looking to sell down here. And a reversal up on 28, but not closing that strong. And if you're buying here, you're buying in the middle of a tight trading range. You also know that there are bulls who bought below 26. And if you bought below 26, how do you feel about 27? Not that great. So you're probably going to try and take your first chance that you can get to get out around break even during 29. And you can see those traders were not let out around break even. Bear bar closing near its low on 30. Can you sell 30? I think you probably can. It's hard to make an argument that we really ever clearly went always in long here. We may have very briefly, but it probably remained always in short most of the time. The only problem with it is that you're selling knowing that we already have, potential 1, 2, and then a potential third push down here. So while you get good follow through on 31, I think it's much better to sell to close at 30 than it is to sell below 31. Because 31, you're selling right on a channel line. And you can see 32 failed breakout below the channel line and a reversal up. I think 32, probably the best trade of the day. It didn't quite close on its high, but still reasonable. 2-1, looking to get back to the 16 low. Why the 16 low? Well, the traders who bought below the 16 low are expected to get out around break even, since this is a trading range day. And if your premise is this is a trading range day, well, look how low you're getting to buy in this trading range day. Very low. So that's good. Follow through on 33, but a tail. You can't expect it to, go straight up with big bull bars. It might be a channel or some kind, but probably not going to go straight up with big bull bars, since 30 and 31 were pretty strong. Follow through 34, 35, and then you get a bull bar 36 closing near its high. Why does this happen, right? Well, people, they're a little disappointed with the high of 32. They wanted it to close a little stronger. And so what do traders want? Well, they want to see another pullback and then another buy. But the reality is they're probably not going to get it. This was a channel line overshoot. And so we're probably going to end up bouncing towards the other side of the channel and maybe back to, this low, maybe back to this low, who knows? But you can see traders were waiting to see if we were going to get a pullback. Bulls and the Bears. Bulls wanted to pull back to buy. Bears wanted to pull back, to get out of their shorts. They sold to close at 31, and they feel they did something reasonable, which they did. So they're looking for an area to get out around break even. If they scaled in higher below maybe a bear bar, you can see on 44. So, if you take this sell, 60% chance it's going to get all the way back to your entry price. 80% chance you're going to be able to sell more below a bear bar and get out around break even. That's what happened on 44. Traders sold to close at 31, sold more below 44, got out around break even. But anyways, what's happening here is you can see traders are waiting for a pullback, and after 4 straight bull bars, both sides just give up and accept that they're not going to get the pullback they wanted, and that's what causes all the buying on 36. Bears covering shorts and bulls buying. Follow through for the bulls on 37, but smaller bar than you want. I thought we were getting back to the 16 low. I was long, and I thought we were going to get back to the 16 low. I was pretty sure of it, but why are we getting a bear bar 38, right? If we're going to get there, 37 should be big, and we should get vacuumed. We should get vacuumed right up to that magnet. And bull bar 39, but not a very good close. Follow through on 40, but it's minimal, and then you get a bear bar 41. So if it's so bullish, right? If we're going to get vacuumed up to this magnet, which is also right around the open of the day, which is always a magnet on trading range day. So we have the open of the day, we have the low of 16. If we have all these magnets here, and we're probably going to get there, then why are we going so sideways here? Disappointment, doji 42, essentially outside down, inside outside bar, really just trading range price action. You can see we're stalling at the top of this trading range. And then a big outside up bar on 42 or on 43, but a tail on the top, and traders just start to give up on the idea of a rally. And that causes bar 44 to close near its low. Can you sell 44? I wouldn't. I think you're selling against a relatively tight channel, and you're selling in the middle of an overall trading range, so not all that good. And you can see the traders who took the sell closed 31, sold more here, got out around break even 45. Some traders, sold 44, disappointed that 45 didn't close on its low, and are scalping out around the close, causing 46. Low one, short 47, but really not all that good. And then a bull bar closing near its high on 48. Do you buy above 48? You probably could, arguing, this is good enough for a second leg up, and it does close slightly above the moving average, and we're probably still getting to the 16 low. So it's probably a reasonable swing trade, but it's just still in the middle of a trading range, so it's probably not as good as it could be. The probabilities are never as good as they can. You want them to be in the middle of trading ranges, and you get big follow through 49, 50, but it's deceptive because it looks like the start of a bull trend. But the reality is, there's tails here, tail here, and you got vacuumed up to the 16 low and maybe the 16 high, right? Maybe some traders bought at the 16 high. But, bulls need more. They need a bigger, a better bar. The context just isn't very good for the bulls is what I'm getting at. 49 and 50 are good bars, but the overall context for the bulls is just not all that strong. Bulls want, they probably would have gotten a rally earlier if they were going to get it. And this just looks like a leg in a trading range. And then you get a bear bar closing near its low 51, solidifying that the bulls, this is probably just a trading range. High 152, but a tail on the top, probably not all that great. We're probably, again, in a leg in a trading range. And then inside bar 53. So 52, 53, I pattern, inside. So what do you think when you see inside pattern, relatively high in a trading range? Probably a final flag and traders exit causing 54. 55 closes near its low. Maybe you sell. But what do you do when you see 56? Well, it's a big bar and you have zero true risk. I think a lot of traders are just going to exit at the market. It's a trading range day, so you have to keep in mind, any move that looks like it's about to be a big move usually just ends up failing. So here, maybe you buy and then you see these and you're disappointed and you get out. You sell this, you see this, it's a good bear bar, but it doesn't close below the 45 low breakout point, and it's really just not as good as it could be. So traders exit causing 57. Low 158, but never triggers. Wouldn't have been that good anyways. And a bull bar 59, surprisingly strong bull bar. Some traders might buy knowing we're probably going to retest the middle of the II. It's probably always in long above 59. The last possible bears are going to exit above 59. So maybe it's an okay swing. You get follow through 60, inside bar 61. But again, it's not all that great. The moving average has been flat all day. So I'd probably rather stay flat and look to buy higher. Follow through 60, tail on top, doji bar 61. Important that this gap stayed open. So traders who sold above 59 were not able to make money. Disappointment 62. The traders who bought the close of 50 disappointed, obviously, in how this went, and they're getting out around break even. Inside bar 63, probably buyers below 60, 64, 65, and then a surprise 66 from the bulls. A good bull bar closing near its high. What are the problems with it? Well, you're buying at the top of a tight trading range overall, and you're buying at the top of an overall or tight trading range from 61 to 66. This is a 5-bar tight trading range, and you're buying at the top of the trading range overall. So it's really not as good as it could be. Can you buy above 66? It's probably a credible swing considering, we've had a couple of decent legs up today, and we might get one more. My main problem with this, I actually thought we weren't going to go that much higher. I thought we were going to end up oscillating around the open. You're all buying also around the open. So I was really concerned, and I thought it was more of a 1, 2, maybe 3 situation, and we were going to get some sort of wedge and come back into this range. But another good bull bar 67 closing near its high. It's okay to be long, and it is by the close 67, follow through 68. Doji 69, but still by the close, I think. More by the close than sell the close, I suppose. More follow through 70, still by the close, follow through 71, and then kind of a climactic bar 72. You can see this channel, we were in a tight channel. We, went above the top and we broke out of the high of the day, 72. If I was long for any reason, I'm taking profits on 72 and I'm walking away for the rest of the day. I'm probably taking profits as 72 is forming somewhere up here and walking away for the rest of the day. But technically, always in long still. Disappointment 73, since a lot of bulls did that and took profits, but then bulls bought again, causing 74. Follow through. We got to the bulls. For stop orders today, I thought 10 was okay and 11 was probably reasonable, but you just got to be quick to get out. You can't buy 10 or 11 and then get stopped out below 10. You need to exit at the latest below 14. You could probably sell the close of 15, sell the close 17, 18. Probably not 19. 32 is obviously good. You could buy the close 33, 34, I think, maybe 35. Probably still technically on 36, but I think if you were buying 34, 35, you were looking for a bounce like 36 and then you got it. So, and then you get kind of disappointing follow through on 37. I think it makes a lot of sense when 37 is that small to take profits, and that's what traders did. I was like 38, a couple legs up. I probably wouldn't sell this. I'd wait to see how the follow through looked, and it wasn't that good. Traders didn't take it. You could probably buy 48, but that's just not my trade. I wouldn't buy these closes. Maybe, but you can't buy these closes and get out down here. If you're buying these closes, you have to find a way to, hey, you're trying to get out below 51 and you get, a second leg up, probably just sell. You could buy 59. You could probably buy, 66 if you wanted to. It's kind of aggressive though. 67, I think is okay. And you could buy the close of these bull bars. On the daily chart, like I mentioned, good bar for the bulls, but I'm expecting disappointing follow through. The bears who sold with this high are probably going to get out around break even. So I'm expecting us to retest this high and this low. So just trading range day. Today's Wednesday, so start paying attention to this. I think we're going to get a bear close on the weekly chart, but overall, we might, I'd pay a lot of attention to the midpoint of the week, which is right around 5,000, which is no coincidence. So I wouldn't be surprised if we close a little bit below the midpoint of the week, right around 5,000. It's the middle of the month, but again, I've been saying I think this bar is going to be disappointing for the bulls. I don't know how disappointing, but I don't think we're going to get a bar closing near its high. I'd be pretty surprised if it closed above its midpoint. I think it'll probably, I guess, at this point be a bull close, but I really don't think it's going to close, above its midpoint. I think we'll probably overlap more with this bar because again, my biggest problem with this honestly is these 3 bars. Why are you getting a 3-bar pullback if this is such a strong bull trend? It's really unusual to get a 3-bar pullback if you're going to be starting a bull trend. And if this bar closes on its high and we start getting we get a really great looking bull bar here, then maybe fine. But I just don't think it's going to happen. And I think once we start to sell off a little bit here, traders are going to see this and they're going to start thinking, well, this is all just a trading range. We're getting a higher high in a trading range. I don't think we're going to go straight down at all. I think we're going to go more sideways for a while. But yeah. All right. That's the day.